Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we head into next week, the major market moving events that you need to have on the radar are going to include the following. So next week we have US jobless claims, retail sales, Empire State and Philadelphia Fed manufacturing data. Now of course we also have March inflation report, which could see a 2.5% year-on-year increase, and many of the world's leading economists predict that inflation could get close to 4% this year, spurred by unprecedented levels of global stimulus. The inflation debate, it's likely to remain a talking point throughout next week, with again the Federal Reserve speaking. We have Jerome Powell speaking at the Economic Club of Washington on Wednesday. And as we transition into this new quarter, infrastructure spending and stimulus, it's beginning to emerge as the most dominant theme of this post-COVID-19 economic recovery. Last week, the International Monetary Fund urged governments around the world to go big on infrastructure spending and stimulus programs in an effort to fast-track economic recovery from the pandemic and shift towards greener energy. Earlier this month, we had President Joe Biden unveiling his $2.3 trillion green energy and infrastructure spending plan to transform the US economy. It's similar to the $1.9 trillion stimulus plan already signed a few weeks ago, and Biden's new package will involve pumping hundreds of billions of dollars into improving the nation's aging roads, bridges, schools, railways, waterways, airports, and cellular network. One of the highlights was $174 billion investment into electric vehicles, billions more for renewable energy initiatives. This is with the goal to build a national network of 500,000 electric vehicle charging stations by 2030. Joe Biden's massive green energy and infrastructure spending plan ultimately means that the US is going to need more commodities, specifically industrial metals, and lots of them, including copper, palladium, platinum, silver, lithium, nickel, and rare earth metals for batteries and 5G technology. Biden's multi-trillion-dollar infrastructure bill, it's expected to spur the nation's biggest buying spree in commodities, which again further suggests that we could be on the verge of a super cycle as demand continues to outstrip supply this year. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, let's start off with gold here, and we'll also have a look at platinum, copper, silver, and we'll take a look at the energies as well. So last week we banked 3,500 points on the breakouts that we saw on platinum, silver, copper and energies at the beginning of last week. So for every one lot that you would be trading, that's $35,000 in just over a week. And for every 10 lots that you would be trading, that's $350,000 of profit. Of course, these are all trades that our members at the Gold and Silver Club have been capitalizing on with us over the last week. So again, going back to gold here, in the last week, we have seen the expected moves. So we've seen the significant push higher here from the lows. It's been over a 700-point move here off 1,676 US dollars per ounce. Last week we broke out to 1,758 US dollars. We are seeing quite a lot of resistance at the moment at this zone. So the first attempt would usually not be able to break above such a significant area of resistance. It's the third time we're coming in for a retest of that level. If you look at gold on the weekly time frames, this is where it does get more interesting. We're right again finding support at that area of liquidity, going back to the summer rally last year where gold rallied to all-time highs. We're still finding support between 1670 up towards the 1750 zone. So of course what gold needs to do here is build momentum, enough momentum to break above that resistance and close above 1760 to start making the march up to the previous swing highs and essentially breaking out of this consolidation that we've been in for now 2 months here on gold. So that's what we want to look out for next week, whether there's enough momentum and energy to push gold above these resistance levels. Otherwise, we may just get more range-bound opportunities which we'll look to capitalize on. So very simply, if all gold was to do would be to stall at resistance here and rotate back towards the 1700 zone, we would also look to capitalize on that tight range that gold is currently residing within at the moment. Silver's also had a significant bounce off the 24 level in the last week. As we mentioned to you on silver asset of the day, look at 24 to 25 US dollars per ounce as a zone to look to capitalize on shorter term trades here. So we built into a number of positions on silver over the last couple of weeks here. Those trades moved nicely into profit last week. We took some profit off the table here. Now, hedge funds and money managers have increased their net long positions on gold and silver in the last week, quite significantly, in fact, with gold. So over a 7% increase in the overall net long position on gold in the last week, with hedge funds and money managers trimming their sell short and increasing on the long side of this market. So again, we want to see whether next week gold can get that final break above that previous swing high, taking us out to the 1 month highs there. If we can clear above the neckline that we've just gone through with you on gold, I'll show you that again. If we can get some momentum and velocity above this weekly high from last week, that's where we can start to build up momentum and then come back up towards the neckline that was broken at the end of February, if we can get that velocity to the upside next week. Then bringing us back to silver here, silver again, it has consolidated and built up momentum since we tapped 24 US dollars per ounce the previous week. You're still getting lower highs at the moment on silver, so what silver needs to do now is break above last week's highs, close above it, and then start to make a move here back towards the highs that were seen in the middle of March. That would take us back towards the neckline, and then you've got a completion of a V-shaped reversal, and also you've then created a higher high here in the short term. Instead of lower highs, you've then broken back towards the neckline here, and then essentially we have a basing formation, a continuation pattern, and then this is where silver can start to build up that momentum as we progress throughout the rest of April. However, very much like gold, if it's a failed move from here, then you could easily see silver start to make its way back towards the lows that were tested over the middle of March here, if it cannot sustain above the 25 US dollar per ounce handle at the moment. So we've capitalized on these outflows that we got at the end of the quarter. We built back into positions here at lower prices. We've taken some profit off the table off this nice bounce that we've seen in the last week, and now we're at a decision point where we have exposure still running with protected trades, and we're in a good situation where if silver continues to go higher, we'll benefit. If it does roll over and sell off, we'll look to get in at lower prices. Then moving over to copper. Copper, we banked 380 points at the start of last week over 3 positions. Essentially, if we were to get a pullback on copper back towards the lows here that were tested over the middle of March, I would see that as a great opportunity to build further positions in this market. Or if copper continues to rally here, especially given that we've got all of the infrastructure spending which is coming in the USA, will benefit from a breakout, particularly now if we can take out the neckline. You've got a nice bull flag here in the last week building up on copper. So ultimately we're bullish on this market. Hedge funds and money managers have yet again increased their overall net long position on this market. And once we see the impact of the infrastructure spending in the US come through, that is again likely to be another catalyst for higher prices here for copper. Now moving over to another industrial metal here, platinum. Platinum also had a significant breakout last week. It actually led gold and silver higher, broke out to 1 month highs. This is where we took profit off the table. Over gold and platinum, we banked 2,000 points on this last week. And again, bit range bound price action here into the close on Friday. If you look at platinum on the higher time frames here, we've been consolidating for about 3 or 4 weeks now, but ultimately it's up on the month. It's up over 1%. And again, if we were to come back down to previous levels that were tested over the middle of March here, these are the zones that I would look at accumulating additional trades on platinum as we progress throughout this month. So I would keep an eye out for really any dips back to liquidity here as an opportunity to buy in. And then if we go over to the energies here, we've been consolidating now for 2 weeks, but energies have been excellent to keep coming in and out of the market. Nearly every day you have a day trade opportunities on energies at the moment. Banked in total last week across our metals and energy positions 3,500 points. It's been very lucrative to just keep coming in and out of these markets, capitalizing on the volatility. And again, it's not just buy and hold at the moment. It really is a trader's market. Commodities, they don't move up in a straight line. They will zigzag, and these pullbacks, these constant volatility that you see in the market, it's a fantastic market for trading. And this is where you want to make sure that you're maximizing it on a daily and a weekly basis, regularly banking profits, bricklaying your account, and compounding your return. What I want to observe now on energies going to next week is if we can get that additional momentum to break above the last 3 weeks of highs here. If we can break above Wednesday, Thursday, and Friday's highs to follow through and then come back towards the monthly highs here, and of course, if we can break and close above those levels, that's where energies can really get going and build momentum, taking us back to the highs that were seen at the beginning of March. So I would look out for that opportunity as well as we go into next week. And of course, if you would like to join our community of successful traders, learn the research-driven approach to the market where you'll be trading the same way as the professionals. You want to be utilizing data, market intelligence, awareness of daily, weekly, monthly cycles in the market, alongside sentiment, key to understand levels of fear, levels of greed, when it's optimal to get into trades, when it's optimal to also bank your profits is very important. We find this a lot, that many traders, they're okay with their entries, but they just don't know how to manage trades or when to bank their profits. Alongside that, you of course want to make sure that you're not using gimmicky, outdated technical indicators that don't work anymore in these markets. You want to make sure that you're using a lot more data and intelligence, aware of the seasonal plays in the market. Capital flow is incredibly important to know times of the month which are optimal to come in and out of your positions, particularly with the cycles that you see with commodities and the major catalysts and news events that can have the biggest impact on commodities. Is very important to be aware of those ahead of time, ahead of those news items, and alongside that, of course, understand macroeconomics, the intermarket correlations, the ratios, and what the banks, hedge funds, institutions are doing week to week. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders and learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You also have access to real-time trade ideas, our institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.